Okay, traders, I am back from vacation, ready to provide some wicked content for you to help you become a profitable full-time trader. Now, while I was away, a ton of you subscribed to the channel. So first off, thank you so much for all the support. If you're watching this right now and you haven't subscribed, do me a favor, hit the subscribe button and the like button underneath. I'm dropping so much content to help you every single week. And also, while I was away, there was a ton of big changes in the prop firm space. All right, loads of changes in the industry, and the one we're focusing on today is the rule changes or new rule enforcement, should I say, over at Apex. Now, there's two key rules you need to be aware of to make sure you get paid out from your prop firm accounts. There have been a notable amount of YouTubers and influencers who have had their trading account payments rejected over the last few weeks, including guys like Trades by Matt. He was just rejected today a $40,000 payment after already withdrawing over $180,000 from the market with Apex. Does this mean he's a bad trader? Do I not support Matt? No, absolutely not. Matt is a fantastic trader who understands risk reward. He trades very fixed amount of contracts and he's very disciplined. There was one time I think he mentioned recently where he went on tilt. It happens to the best of us and he owned it. That means he probably won't get a payment in the next schedule, and possibly once before, maybe his risk reward was off, or maybe he added one contract size. I don't know what it is, but I know that this does not mean Matt is a bad trader at all. He will simply adjust to the new rule changes to make sure he gets paid out. And that's what you need to do, and that's what I'm going to teach you to do in this video. So we're going to go over the two key rules. The dollar cost averaging rule, which you need to be aware of because there is a very clear change in how they assess dollar cost averaging, and also your risk reward profile. So as always, hopping over into the charts, let's get straight into it. Now I'm bringing you over to this chart on purpose, right? We're still open now, and I want you to just look at this, all right? This is what I would call the basing out of a range down here. And previously, before these rule changes, I would be okay with taking positions all over this range if I'm thinking bullish for an expansion back up to run all these stops, okay? But the new changes with Apex don't allow me to do that. Now I'm going to show you why. Let's just say right here, I mark it in.
Order
so
filled.
Marketing in 15 contracts, okay? And I'm going to look to build a position down towards the bottom. So we're coming down a little bit more. Let's say I mark it in
order
another
filled.
15 contracts, all right? This is okay. Now I've had one initial position and one add. But what Apex will not allow me to do anymore is add to my position more than once. So if I do this,
order filled,
I have now broken a rule, okay? Even though I would argue that this is building a core position within a range, this is not the same as dollar cost averaging. It doesn't matter. If you argue this with Apex, it will fall on deaf ears, okay? You now need to trade this very differently. You can have one position on, that's your initial position, and you can add to that position once. That's it. No further adds, right? So any more than that, they will consider it dollar cost averaging. It doesn't matter if you're building a core position. It doesn't matter even if you're doing one micro initial, two more on, and maybe three on after that. You can't do that. That last three, they can't be there, okay? So one add after the initial position is all you are allowed to do. So you need to adjust for that. It doesn't matter if this trade goes green and it comes and takes out all these stops up here. It makes no difference to Apex. They don't want you doing what they call dollar cost averaging, all right? So just make the changes. Do yourself a favor, make the changes. What does this mean? It means you need to be very accurate in how you trade, all right? So I'm going to take this position off right now. So how do you need to trade these? You need to trade very accurately, okay? You can only put one add on. So what I would advise you do is don't even do that ad, all right? Unless you really need to, you don't need to do that ad adding into a loser. Adding into your winner is fine. If you are starting to build a position while you're in the money, you can add as many times as you want. You just cannot add when the position is negative, all right? So if I took a market
order filled
play here, all right, I'm not going to add to this position. I can add once more on if I wanted, but what I'd really look to do is just sell
Order
this position
submitted.
into my key target, put a stop in place.
Order submitted.
Okay, and maybe just move this nice and tight, all right? And if it starts failing, so be it. I will get back in at another point in time. So now we're starting to expand. Now I can start to trail this nice and tight. Oh, don't do that.
Order submitted. Order cancelled.
So now if we're starting to expand, I can trail this, all right? If I'm using big size like this, it's not a problem at all. It's going to knock me out. That's absolutely fine. We would just go again, all right? So it's holding this key level. This is probably a tiny bit tight. There we go. And if we get expansion here, then it's all going to work out just fine. And if it knocks us out, that's also just fine. And that's what Apex want you to be doing. They want you to be okay with being knocked out of the trade and just reassessing and trading again, which is absolutely fine. So let's just let this play out. Whatever it wants to do is fine. While this is going on, I'm going to tell you one other thing that you can do. From my days in the small cap world, I like to put on one very small position. It might just be one contract, two contracts, just to get a feel of how the market is moving, okay? And then once the market starts to prove to me it wants to do what I want, then normally I attack it with size. Now, previously, that might be over multiple orders in a range just like this. So, for example, I might have put one on long here, and I might have added back in a bit more here, and then once it starts to prove itself here, I might be putting more and more and more size on, looking for this squeeze up end of day to come and clear these stops. Can't do that now, have to be very careful. So what I can do is put a very, very small size on at the low end of the range, one or two contracts, and just wait. Let it prove to me that it's ready. Then I can start adding size on, even if that is to the downside. If I feel like I am right, I have conviction. If I had one on here and I put 20 on down here, it's absolutely fine. It's not a problem. It's going to move my average all the way down. All right, so you are naturally dollar cost averaging, even though I don't agree with what it is. You are playing a range, but how they see it, that would be dollar cost averaging, but it's only one add, which is absolutely fine. So that first add to your initial position can be as big as you want. Now you see this is starting to work, which is why I'm saying I'm going to adjust my strategy to just doing this. I'm going to be very accurate, and I'm just going to trail very, very aggressively like I always do with Apex. This is ultra aggressive now because I just want to get out this trade so I can teach you the next thing. So hopefully it stops
Order
us out.
filled.
All right, so we're out now.
Order cancelled.
That's the first part of the rules covered, the DCA. All right, so no longer can you be building core positions. The second thing I want to go over is the risk reward profile. They are saying that you are allowed to risk 3 R to make 1 R. So for example, you can risk 30 points to make 10 points. That would be a risk reward profile of 1 to 3. All right, I would suggest you do that the other way around, but that is an example of what they are now allowing you to do. So how can you make sure you obey that? I always suggest you use hard stops. I've always said that. But if you're a person that really struggles with that, then you need to at least put a mental stop in, and you need to have an exit plan. I don't think every trader does that quick enough. You should know where your exit plan is far, far before you get on the trade. So the best thing to do, right, is really just to create an ATM. So here is an example of an ATM. Let's just edit this out. So we can do a stop loss here. Let's do a 90 tick stop loss and a 30 tick profit. That would be what is acceptable via Apex. This is not how I would trade, but if you wanted to do this as a max loss scenario, for example, you could do it. So now let's just buy in at market.
Order filled.
Okay, so here's my profit, and I'd have to scroll right the way down, and it would be acceptable for me to lose all the way down here and take profit up here. Okay, that's an acceptable thing to do. Do you need to risk that much? Absolutely not. There's absolutely no reason for me to be risking that much. I can move this right up. That's about a 1-to-1. I can move it much, much tighter now underneath this and risk far less. In fact, now we're starting to go positive. I can move this into the money. And like I always say with Apex, you want to be scalping. So as you can see here, we're pushing up. This was the trade I was always looking for it to do. Now I'm being aggressive with this stop. Like
Stop
this.
filled.
I'm out, okay? And now I've locked in good money. And this is how you need to trade Apex, okay? It's not hard. These adjustments are not hard, okay? If you understand your risk reward profile, you understand your max size on the trade, if you can trade consistently with that size, you will start making money with Apex. Just adjust to these rules, make the adjustments, and trade this out for the next 4 weeks. And by the time the next payment comes around, you will be absolutely fine, okay? I'm sure they will be flexible with some of these things. If you can just prove to them that you've got a solid strategy there, keep the accounts going, grow your net wealth in those accounts, and draw out once you have stuck to these rules for a consistent amount of time. Now, it's not all bad with Apex either. They are looking at some very, very positive rule changes potentially to come later in the year. What do these rule changes include? These rule changes include things like withdrawing after 8 days instead of 10 days. Another rule that they're considering right now is being able to apply to withdraw at any point in the month rather than that period. I think it's the 10th to the 15th and towards the end of the month where you can only apply in 2 stages. They're trying to make it later in the year, ideally, so that you can request payout anytime in the month as long as you have passed that threshold and you have the minimum amount of trading days under your belt. So it's not all negative. There are some big changes coming. So just stick with it, all right? Make the small adjustments. If you're someone that is truly dollar cost averaging in all the time, you shouldn't be doing that anyway. If you're someone who's been building a core position, make the adjustment, all right? Just make the adjustment. It's not going to help you to bitch and moan at them. Make the adjustment to your trading strategy and you'll be absolutely fine. I've given you the tools here. Create an ATM, be aggressive with that trail, and take your profits and lock it in and move on. I'll see you real soon. I'm going to go over some of the other big shakeups in the industry with some other firms really soon. Don't forget, the Apex sale is still on. You can get the link underneath. It will give you 90% off until the end of the month and 80% off reoccurring. And as always, I still have that sale on until this weekend on the Flowzone Trader course. There's 30% off using the code EUROTRIP. www.flowzonetrader.com. Again, I'll drop the link underneath. You know the score by now. Use hard stops. I'll see you soon.